This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Interested in learning more about investing in startups, launching a new startup and need to raise funding? The Startup Funding Espresso is a daily podcast in a short, concise format delivered to your inbox every day, Monday through Friday. In the time it takes to drink an espresso, you can learn about startup funding. To subscribe, go to investorconnect.org and put your email into the pop-up box. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Krishna Srinivasan, founding partner at LiveOak Venture Partners. LiveOak Venture Partners is a venture capital fund based in Austin, Texas, with 20 years of successful venture investing in Texas. The founders of LiveOak have helped create nearly $2 billion of enterprise value. Krishna, thank you for joining us.
A pleasure.
Great. So what was your background before you started investing in early stage companies?
Well, I've been doing this a long time, Paul. It's been 21 years and counting of me investing in early stage. I had a lot more hair. No, I'm just kidding. So well, before this, I went to graduate school at UT in the engineering school there, went to work at Motorola in the 90s, and then post-Motorola went to business school, and then joined the venture capital industry fresh out of business school. This is what I've been doing for a long time.
That's great. So what excites you right now?
There's so many amazing areas to invest in. To back up our strategies to back entrepreneurs who are on a mission to build world-class companies that come out of Texas. And that's my focus has been on early stage investing in Texas this whole 21 years. So what excites me right now is we are absolutely seeing Austin and Texas at real critical mass of talent, critical mass of incredible companies we can back, critical mass of large companies out of which more talent can come out and success stories, critical mass of capital available, both at early stage and certainly for later stage. So it's an incredibly exciting, fruitful, productive time to be doing what we do, which is to build back early stage companies and work with them to get them to be world-class category leaders in 5 to 7, 8 years. It's just never been better with respect to quality of entrepreneurs, quality of companies here in this market.
That's great. There's certainly a lot to be excited about now for sure. So you see a lot of startups and you see a lot of investors. What's your advice for people investing in startups? What do you tell them to do before they write that first check?
I think we are, as a firm, and me personally as an investor, I massively over-index on the person. And, so that's what I tell people to do is people so easily say it's all about people, but then they go back companies just because they get excited about an idea, they get excited about a market, and are not sufficiently diligent on the person who's driving it. Maybe it is semi-investor hubris that, I'm a smart investor, I can help fix all these problems. Or they believe they know the industry so well that they can overlook the entrepreneur, or they have somebody in mind who they can bring in to be a CEO here, etc. Our humbling experience would say that, look, it's really important to back the right people, people who have, who are ambitious, who've got a great insight around the problem they're solving, and most importantly, can be really collaborative with us. And together we can work with them on helping and be a partner with them in building great companies. So it really over-indexes on people, but not simply around, you're not trying to back a super, super successful entrepreneur the next time around. You had a lot of success backing first-time entrepreneurs, but what the commonalities of these first-time entrepreneurs end up being around those elements of tremendous collaboration they bring to the table. They've got, unbridled ambition, energy to really disrupt and challenge status quo and build a big company. and they bring a special insight to the problem. And the combination of that packaged well has led to some amazing success stories.
Great. And then on the other side of that table, what's your advice for people running startups? What do you tell them to do before they go out to raise that first round of capital?
I really ask people to think deeper about when they tell the story, what in their life's journey gets them to that idea, gets them to that insight is a really important one that I really focus on. Again, they might be a first-time entrepreneur, but they're onto a certain problem for a certain reason, and they might have come across a problem as a customer, or as they might have been in the industry before. They must have experienced that pain point for them to bet their life on solving that problem. So I really ask people to channel their journey to the point, to ask themselves, what is their personal journey that's got them to the problem, and the greater fit there is with the person's personal journey there to get there in tackling it. I think it's a phenomenal win-win situation there. The case in point, one of the most exciting stories is a recent company which we are, honored to have been part of the whole journey, which we just took public on the New York Stock Exchange, called CS Disco, ticker symbol Law. We backed this company as a first-time entrepreneur in December of 2013. This was a cold email that came to us. But the founder here was a young lawyer who was working on a software for law firms and corporations. But that was the output of his own personal needs he had experienced as a part of practicing the business as a litigator, and hired a couple of smart computer scientists to go build a product for meeting his needs. So he had incredible amount of insight into the pain point for it. What does someone like him require to solve their problems? And just oozed domain knowledge and insight as a part of his journey. So he could talk. He could be super articulate. He could talk with conviction as to what was the real pain point here, and that he was looking to solve. And then, of course, we could work with him through the whole journey. He was, as I said, supremely collaborative. He was, obviously very gritty, lots and lots of challenge along the way, managed to persevere that along the way. And went on to, go list the company on NYC. It's a $2.5-3 billion enterprise value business. And of course, there was no denying the fact that there is some good luck and serendipity along the way here to get there. But I think, go leverage your personal strengths, personal journeys, be in for the long haul, be gritty for the long haul, find good partners, advisors with whom you can have honest, intellectual, collaborative discussions here to build a business. And, as they say, fortune favors the brave, and you'll catch a few good breaks. And of course, some bad breaks along the way as an exciting business gets built, which will hopefully deliver both business success and financial success for everybody involved.
Great. So let's talk about the state of startup investing. How do you see the industry evolving from here? Where do you see it going?
There is what's different today compared to my 21 years is how there is, of course, immense amount of capital available pretty much across all stages of investing, across all stages from the pre-seed stage, seed stage, Series A stage, B stage, growth stage. There is so much capital available, which is good news, bad news. The good news, of course, is that for companies can really invest well on product and sales and marketing and look to really be ambitious and build great companies. Of course, bad news is some companies tend to get overfunded. And, as a result, when things are overfunded, they lack the rigor and the discipline perhaps to, be more systematic, be methodical about being disciplined about where to make investments in in different stages of the business. And so it's definitely an exciting time to be an entrepreneur. There is venture category and venture startups have never been loved as much as today by capital source on a global basis. There is technology that permeates and spreads across every single industry. Software and tech is relevant in boring industries to cutting edge industries. It's absolutely a great time to be a tech entrepreneur who's looking to disrupt everything from tech industries to mainstream industries, all of which can be massively transformed by it all. So it's definitely a great time to do this and to be an entrepreneur. And we are seeing incredible amount of company success, wealth creation, all underway as a result of these trends.
Great. So let's talk about your investment thesis. What exactly is your investment thesis, and what is your criteria for investing in startups?
4 dimensions to it. A is we are first institutional money, which means seed and Series A as points of entry into companies. Number 2, all companies we back have founders who are based in Texas, at least the principal founder is based in Texas, which means there could be a critical mass of activity here in Texas. And that's because we like to work closely with our companies. We like to be helpful in company building. We like to bring leverage to the company and help it accelerate and grow faster. Our networks are second to none here in this market. And so we can do a better job of company building here than any place else in the world. As a result, we are very disciplined about investing in companies, only in companies that are based out of Texas. Number 3, we are active investors. We always take board seats and pretty much in all companies. We play the role of a lead investor through the whole life cycle of a business. In fact, even post an IPO at Disco, and I became chairman of the board as a part of going public. So we continue to be a lead investor, lead director, well past an IPO stage of a business through the whole life cycle. And overall, our model is to be a full life cycle investor, even though the first check is somewhere between $1.5 to $4 million for the first check. We invest across full life cycle of the business through the subsequent rounds of investment financing as well for it. So those would be the 4 elements of our investing model.
Great. Well, you've already talked about CS Disco, but can you talk about 1 or 2 other portfolio companies?
Yeah, a lot of companies that fit the profile. Homeward is a great example. We backed a single entrepreneur who is, again, wickedly smart about real estate and the future real estate tech and how better financial products can significantly make the home buying experience much more frictionless. It's a kind of an intersection of both fintech and prop tech. And that business we backed them about 32 months ago. It's exploded in growth. The company just raised a $137 million equity round at almost approaching $1 billion post-money valuation, and led by Norvest and Blackstone. It's one where same model. We've helped. He's a first-time tech entrepreneur. Helped him build company, build team, build organizational design, and all of that for the whole life cycle of the business. Ojo Labs, another one. Again, this time as a repeat entrepreneur. Previously founder of Yodel here, and then subsequent to that, he started Ojo Labs. We were first investors in that company, and played a pretty active collaborative role with John Berkowitz and David Rubin through the life cycle of the business, and it's on to doing some amazing things as we speak.
Great. Well, you see a lot of startups and investors out there. What do you see as the main challenge your startups face when they raise the funding and go forward with the company? What do they mostly struggle with?
It's stage. It's very specific to stage, right, Paul? When companies get started, we think about, are you establishing good product market fit, which means, are you able to find customers for this product? Are customers really getting value for it? Are they renewing their licenses and not churning here? All would symbolize having a good product market fit, finding the right segments, and building products to meet the needs of those segments. The next phase, once you're past product market fit phase, then the next time you're trying to figure out is what is that go-to-market model, right? Are you trying to do a product-led growth kind of a model? What makes sense here? Are you in a big ticket enterprise sales? Are you trying to build an inside-outside sales model here? What does your go-to-market look like? And how do you acquire customers? Where do you acquire customers from? Do you have an SDR team to cold call? Are you doing digital marketing to get them? So you got to go figure out your go-to-market challenges. And once you go next, and the next step is you got to scale it all, including a next generation product, et cetera, et cetera. And that's how the goalpost keeps evolving as the business scales and grows and develops. So there's nothing called one big challenge that companies need to solve. It's an evolving one as you scale and mature the business. And it's all about, entrepreneurs and their investor board members together, helping think through what truly is the stage the business is at, investing in the right kind of resources that are appropriate for that stage, setting up the right kind of goalposts and milestones for the business at that stage, of course, before capital runs out, and executing through those phases. That very much is the art of the early stage game.
And given the current frothy times, what do you think is the challenge the investor faces in today's frothy market?
There used to be a lot more friction for late stage capital in these days, with as much capital that's chasing companies, etc. These things have definitely taken off. Companies get very heavily funded well before they've really, really established product market fit, and suddenly companies are investing in sales and marketing a lot more aggressively well before that fit has been established, and results in bad business practices, results in unprofitable business practices, and those kinds of habits start to set in stone. And there's more capital than that gets thrown in because there is revenue growth, and there is even more bad practices get cemented here, and the cycle goes on. Right? I think while capital is absolutely the lifeline of the business to be able to hire, to build, to sell more, etc., it can also result in some level of bad practices unless one is careful and deliberate about make the right investments, the right sequence for these businesses.
Great. Well, you see a lot of different applications and sectors out there. If you had to pick one or two that you think are really good immediate opportunities for investors to pursue, what do you put at the top of the list today?
It's hard for me to say how. Look, I am not a proponent of, I know the magic silver bullet and what great segments out there. There are thousands of stars, there are thousands and I would say billions of opportunities, but there are a large number of interesting segments, large number of opportunities in what seemingly look like bad neighborhoods, suddenly look like great companies, great neighborhoods. Just plenty of opportunity out there. And so it's not, I'm not going to be out there preaching, that's a great segment to be in, guys. It's, again, we are very people-driven. Good entrepreneurs come to us with great insights into exciting niches, exciting opportunities, exciting ways to disrupt the status quo in existing markets. And we are there to help them make that happen. But I think definitely an area of strength for Texas very much is, look, there are a tremendous number of traditional industries in the state, and many of these traditional industries, when cross-pollinated with technology talent, it's leading to some very exciting companies. For example, that's where you have tech in real estate as PropTech, tech in finance as FinTech, tech in insurance, InsurTech, are all exciting areas. A lot of healthcare tech that's available. And that's because there are a lot of amazing businesses in these traditional industries where people with real domain, real insights come out of these companies. They pair up with the technologists, and that's leading to some exciting, new company formation, new company creation that's happening. And that's what's creating a lot of, opportunity and scale out there. So not here to preach one particular segment, but this cross-product intersection of these different technology, mixed mated with one of these traditional industries leads to some really exciting opportunities all over the place.
Absolutely. Well, in the last few minutes that we have here, what else should we cover that we haven't?
No, I think that's you covered it all. I think it's an exciting time, and for to be an entrepreneur, to be an investor, and but people should make sure their capital, their opportunities are processed carefully, judiciously, and hopefully people always look to build long-term sustainable businesses as opposed to building businesses that are for the short term, and use the plentiful capital available to build the building blocks, to put up the set of the building blocks for long-term exciting businesses.
Great. So how best for listeners to get back in touch with you?
We are very much an open door here. No ideas too early. You can reach any of us at LiveOak at first name at liveoakvp.com. So for example, for me, it's Krishna at liveoakvp.com. You can also, contact any one of us in the firm that way. And always open to hearing early, exciting companies, especially there in Texas.
Great. Well, we'll put those in the show notes. Want to thank you for joining us today and hope to have you back for a follow-up soon.
That sounds good, Hall. Thanks for the opportunity. Enjoy talking to you as always.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.